Okay. Now let's work on planning. Let's take this. This double breakout. It's not the most exciting breakout, but it's still, we beat them and we're rolling into balanced swings, right? So let's take this and see if we can plan something live. I have been tracking wheat. So my focus right now is going to be on making a plan rather than knowing what the perfect trade is. All right, so what we're going to have here is number one, going to have a trade plan, okay? And in that trade plan, what will we need? To know exactly position size. And I'm going to use an example of, so what we'll do is I'm going to use an example of, say, let's just take a nice even number, 100K account. And we're going to do a 2% risk. And by the way, this is a ETF of wheat for those of you that don't want to buy wheat futures. But the main exercise is on making a plan. So position size, example of 100K, and we'll use 2% risk. So that will equal in dollar terms $2,000. All right, so as we're trade planning, the next thing we need to know is our method. So our method, swing trading, right? This is just swing trading. This is going to be a swing trade, and then we can further make the distinction that this is going to be balanced swing, after breakout. So let's just make sure we see some things. So we're swing trading. This is the pattern we've been just talking about, where we have some minors. They break into a possible major. We let them build it. They zoom it. Maybe they retest, maybe they don't. And this is going to have basic steps. Over here, okay. So we're placing our swing trade in a particular context here, meaning just like the ES, well, it's not a double breakout yet, is it? So it's just one breakout, but we'll call this a first pullback here. Balance swing. So we'll call this swing trade. First pullback. after breakout. So a swing is a swing is a swing. But this is just helping us with our context of what we're putting our swing trade into. So we're going to have impulse. So let's just mark it all out. And what I'm calling the gap slide is just where, you know, the impulse starts to build a shelf that will later cause the scary. It's where the swing, you know, it starts to slow down from its verticalness. And so our name for that is just gap slide, although it can be just a flat out, you know, shelf. It's going to be something that, you know, once cracked, the miners are going to be getting stopped out. And then step 3 is going to be the scary move. And all of these have their nuances. And step 4 is let them build it. And basically what that's saying is as price is pushing down, what we want to do is let it rear its little head up a little bit, have sellers knock it back down. See, we want it to swing a little bit, rear its little head up, have them try, have sellers knock it back down, and that's going to be our let them build it in some way. If it was just one bar, it's going to look like this. If it's a series of swings, it's going to look like this, or it might be a tail, but it's going to go up, make an effort, and then we want that to later get taken out to prove to us that we're swinging back up. So that's the let them build it phase. And then we have the swap of sorts, CIB, zoom. Change CIB stands for change in behavior. It could be of little swings, an outside bar, a tail. It's swapping. And I've done plenty of things on swaps. It's building that kill zone before, you know, that potential kill zone is what it's building, making a pivot. And then step 6, choose your poison for entry. You can buy stop your way in, zoom retest, several options here. All right. So this is, all of this falls under method. This is our methodology, a swing trade. So what's the need in this trade plan? So first, let's see it. We have the breakout, okay? We have price going very excited. Look, I mean, in that momentum, we have price going zip, 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 zip. And then price, it builds its little shelf in here. See, they're trying. And now it zoom, right? Now we're at the scary phase. Bring this over here. So now we're at the scary phase, and we're looking in the neighborhood of a balanced reaction leg. So impulse, this is the gap slide where it starts to build buyers, who get popped. And now we need to get into the let them build it phase. So we're trying to work this whole thing into a trade plan. So let's also note this is a first pullback after breakout and balanced swing, balanced reaction leg. Okay, so far so good. What do we need next? To know? Well, before we get a target, we got to do some other things. Raj, Raj, why do you always answer my question with a question? No, say it like you mean it and be wrong. Thank you, Raj. Own that puppy like a stop. What do we need next? All right, we're making a trade plan. And we want to know some things exactly. Exactly. We want to know exactly. There's a few things we want to know exactly. I don't care if you're trading a 2-minute or 1 minute or weekly. Stop? What comes before the stop? We want to know exactly how we're going to get in before we set a stop. What's going to be our entry? And so then the entry and the stop will come together, you know. So we want to know exactly how we're going to get in, right? What we need to enter. And we have choices, you know, we can, once we let them build it, we can buy stop our way in, we can do a Zoom retest. So let's watch this market. So we have all of these things in place. Good sign when you get a huge bar here. They're starting to build it, aren't they? You see them. How do we know they're starting to build it? Well, they're running into sellers, knocking it down, sellers, knocking it down. So this is the let them build it neighborhood. This is our model, guys. We're in the let them build it neighborhood. We don't know. We want them to tell us. Okay. So we have to take this to current since we're going to actually make a plan here. Let's see what price does. Just so you get a feel. Ah, we're zooming. So obviously it's too late to kind of do a buy stop. If you did a buy stop, you'd be in here. So in this entry, let's plan a Zoom retest. What do you think? Okay, Zoom retest. So if we do a Zoom retest, I'm just going to automatically throw my stop underneath the pivot. So we know price drew itself from here. So let's plan, and it gaps here. So I don't know, we can cut it in the middle here, something like this. And we will put a stop. We'll give it a little bit of room. You know, don't go a tick. I kind of like to get underneath this true level. See how it made the pivot? So I think these guys should hold. So I'll give it a little bit of room there. No, you don't need to give it a whole bunch, but we don't need to be cheap either. Okay, so we have price 602. Let's make it an even 6. Yeah, now I'm afraid I might miss this. Let's make it, let's do 603, okay? We'll do 603. And our stop is going to be at 571. All right, so as you're making your plan, this is easy. If I can grab this. So the entry is going to be 603. And this is what you're going to put on your sheet. And it's going to be based on Zoom retest. Okay, so this gives us a stop, and the stop is going to be 570. So I know a whole lot of things ahead of time, and I can go away and begin to leave this trade alone. And we're going to have a target now, right, Raj? Now we can do a target. Raj, I know you got your eye on the money ahead of time. I get it. That's good. I'm with you. So now that we have our distance, okay, now that we have our distance, we can figure out, since we're not doing futures contracts, and you do this with futures contracts if you're trading futures contracts. So now we need to figure out how many shares of this puppy we can trade at 100K. So the risk is going to be 2,000, and our risk is going to be a measly 32 cents. Is that right? A measly 32 cents. So that should give us somewhere in the neighborhood of 6,200 shares. I'm dividing the 2,000 risk by this, and there's plenty of little position size calculators. You guys check me. Did I do that right? About 6,250 shares? And 6,000 shares, 6,250 times 0.32 is going to give me a $2,000 loss. Okay, that makes sense. No, my math is the same way. So this is going to be 6,250 shares. And that's just saying, if I enter here, take a 32 cents, so I'm taking the 2,000 divided by 32. That will give me exactly a $2,000 loss. And at 3-to-1, that will give me a $6,000 gain. Okay. So target, let's think about target here. So target can be somewhat subjective, or we can make it very objective. I mean, we can draw, we can draw a median line if we want to look for target. That's a little more subjective. It's a pretty good median line, actually. Or what we can do is play with the impulse leg and see where that gets us. So this current impulse leg only gets us about so far, but what if we took this whole impulse leg here, guys? That gets us more than 3-to-1. All right. We'll have to talk about exact targets and start to make that as objective as possible. But for now, we'll do impulse. We'll do this major impulse, and we'll use this as our target, somewhere in the neighborhood of 725. Now, this isn't like a high volatility stock. You see, it's only 32 cents. It doesn't have a lot of volatility. It's kind of stodgy, but it can run when it gets its oats. It can get going. All right, so now we're going to manage it with this guy. We're going to take the stop plus 1 to 1. And so if we get entered, what we'll do is if price takes us in right here, and if you want, you can use your own management. As price moves up, our stop moves up with price all the way to target. And so that's how we're going to manage this. So that's the next part of this, is the trade management. So we will very simply trail with 2 to 1. Now, it looks a little more complicated than it is, but what I want you to do with your trades is put down where you're going to enter and why. Know this ahead of time, where your stop's going to be and why, how you're going to manage it and why, target and why. So you write down those few things. You plan it, and then you just follow the plan. Everybody talks about psychological issues and emotions, and so there's a lot of choices to make when you're in a trade. Oh, it looks like it's going to go. It looks like it's going to do this. It feels like that. What about this? What about this? What about this? Now, once you do all of this, you have only one choice left. Follow the plan or don't follow the plan. Have trouble following the plan, you work on that. You have one choice left. Follow it, be responsible for following it, don't. And if you don't follow it, that's fine. You fall off the wagon, you try again. And this isn't about any one particular trade. It's about finding the balance between structure and flexibility in your trading. And setting these things up ahead of time is going to be relaxing. So now you just place your orders, and you really don't have to do much else. That's it. That's all you now have to do. Okay, let's do a follow-up to this trading plan on wheat. What you heard was a clip from one of our live sessions as we planned this trade out live. And the session was really about trade planning, not the setup. It was about combining a swing, combining a method with knowing how you're going to get in, your entry, your position sizing, how you're going to manage the trade, where your stop's going to be, where your target's going to be, and planning that out and knowing that all ahead of time, and then just following the plan. That's what it was about. And the method was just a simple first pullback from a breakout. It's important to know the method, but if you don't have any kind of a plan with your trades, you're liable to be all over the place. It's not just about magic lines. But being able to read price is also a beautiful thing. So you can see the steps in just a swing trade. This is also what median lines point us to. Structure, swing, swing. And there's a beauty to this chart. There's a beauty to being able to read a chart. Look at how these two swings are pretty close to my model. impulse. They start to slow down. See the buyers? And so these are the first guys who are pushing, and then they get whacked. See that? And then this guy comes up and gets whacked, and he shows us exactly where the most recent sellers are. And then boom, boom, boom. Same thing here. New high telling us a basic direction. Some buyers hitting on the shelf. We can feel it. And then they push him off the cliff. Pop. Pop. We have sellers here. This is reading a chart. We have sellers here. If I was to just give you this, you'd say we have two little swings in sellers. And then boom, boom, boom. Like that. Ah, that's changed. Now let's take this little piece of price action, which can be the pivot component, and place it in the context of a swing. That's the language of price. The little bars are like letters. You combine them into a structure. It's like a word. You combine the structures. It's like a sentence, and you can read price, and you can see it. It kind of does the same things over and over, whether it's a 2-minute ES chart or a WEAT daily. So just to follow up on this trade, we can follow the steps of this swing. Step 1, impulse. Step 2, right, the gap slide, the shelf. Step 3, the scary move. Step 4, let them build it. Step 5, see a swap. See these 3 bars? Boom, boom, boom. Boom, boom, boom. Step 6, choose your poison for entry. Now we have a half dozen entry options at this point. I chose to use a test, Zoom retest, and so I never got filled. Some of our members chose a few other options and are in this trade. Now for me, since price has made a new high, I'm going to cancel this order. I don't mind leaving this order in here if price wants to bounce around under the high and hit me, but once it's made a new high, I'm going to reset myself. So personally, I'm canceling this, but this was more of a demonstration on making a trade plan from beginning to end. And as for wheat, it's got a nice 2-year breakout. We're liable to be visiting this thing again at some point. It's liable to be moving. So we'll see.